Yeah, this is the first one of our Meet the VC series, and Tret was very kind to offer his time and space here to talk to us today. So first of all, I wanted to say hi, Tret. How are you?
I'm good. How's it going, Paul? I didn't realize we coordinated, same haircut, green shirt, you know?
Well, it's strange because when we first met, I had long hair, but after I saw you, Tret, I just felt I needed to kind of to join the club here, and so yeah, my wife's not too happy, but here I am. I'm joining. I've joined. Okay, with
Yeah.
thank you for that. So today let's dive straight in because I know that we were a little bit late. That's our fault. A little bit of a technical challenge, shall we say, to kick things off. But thank you for everybody for their patience. So today, what I wanted to do, I think for a while now, as people who know, who look at my social, they know that the mission here is to reduce the failure in 5 years ratio, and it's something that I'm really passionate about. I've been involved now within the tech scene for a number of years, and I work with founders, VCs, accelerators, and I'm really trying to help close this gap. And as part of that process, obviously, I get to speak to lots of you guys from VCs to founders and different people. And I think one of the most common things that I find on both sides is what is almost a disconnect between the VC, private equity investor network and the founders. And I think that is primarily because of the markets and the fact that, if you're giving them everything they want, i.e. money, then they're really happy. And if you can't, then they're not. And so what I wanted to do was debunk some of those myths that fly around. I know that you and I had met and that we really got on really well. I think you've got a great outlook on life. I think you really do genuinely do care. I think Render Capital really care. And what I wanted to do today was give a platform for you to ask you a bunch of questions, find out a little bit about Tret and about Render and about what you guys are doing, and try and bridge that gap so that the founders out there, I think there's 150 that have signed up for this, so that they can understand really how this is working and how they can potentially kind of access VCs, how they can perhaps maybe access you, albeit you don't want your inbox blowing up anytime soon. But yeah, so that's the mission here. So thank you for joining us. I've literally just come back from New York, and so I'm back in the UK at the moment, and I've not had much sleep, which means that I'm not going to do as much talking today. I'm going to leave you to do much more of that. And so, yeah, please go ahead, Tret. Please give us a little introduction to yourself and to Render Capital and what you guys are up to. That'd be wonderful.
Yeah, happy to do so. I will say, I don't know what some of the other VCs that you've interacted with are like. I welcome founders to blow up my inbox. My email is on my LinkedIn. It's tret@render.capital. We do pride ourselves on always giving an answer to founders. Might take a while, and most of the time not going to be the answer that you like, but we will give an answer. But yeah, quick intro about me, Tret, principal here at Render Capital. We're an emerging fund out of Louisville, Kentucky, $30 million under management. And, we invest in anything except for hardware or companies in heavily regulated spaces such as life science, biotech, crypto. Pre-seed and seed is where we usually like to play, and then we are geography focused with preferences for the Midwest and the South. However, pretty much we'll take a look at anything as long as they are not in New York, Boston, and the Bay.
Okay. Why not in New York, Boston, or the Bay? Tell me why. Oh,
Man,
yes.
there's a lot of reasons. The short answer there, it's just in our LPA. So legally we can't. But
Okay.
outside of that, really, is that the valuations are crazy. Those
Yeah.
companies don't need access to capital. Like that's not a barrier for them. You can throw a rock and you meet a VC. We honestly, I'm not smart enough to go head to head with some of those major hub VCs. So it's a little bit easier for us to focus on operations, capital efficiency, valuation slower, and then most of our network and resources where we are able to be impact investor for the companies that we invest in are in Middle of America.
Cool. Trent, that's so refreshing to hear. And I know that you've been very humble there saying you're not smart enough, because what I will say is, since we marketed that we were speaking to you, and this is the first time that I've told you this, the number of founders that have contacted me saying that's a really great VC, that he is a great guy, is really interesting. It's really cool, and it should be something that you guys are proud of, because obviously that's something that's important to you, that you are approachable. And like I said, I think you're being very humble saying you're not smart enough, because that's certainly not what I've been told. But thank you, I appreciate that. Um, the first question then, drum roll, the first question of the whole series. No pressure, Tret. Can you share a personal story or experience that has had a significant impact on your career as a VC?
Yeah, I wouldn't say this is just as a VC. I think it's an impact on my career, like regardless if I was in VC or other
Yeah.
position out there. It was when I was interning at a nonprofit. It was my first real job that's not like waiting. I was working for the director of marketing for the nonprofit, and at the time, we were gearing up for a program or an event or something like that. And, this is me fresh out of college, first real job. So she like gave me a task and I had to like go figure it out. For me, I was like, I don't know what the decision to make. I was hoping I could call her and say, hey, this is the problem I'm having. Which one do you like? What do you want me to do? She answered the phone and I love her. She taught me so much. Pretty much she answered the phone and I told her the problem and I told her like, Rachel, I don't know what to do. Like, can you help me out? And she said, Tret, I need you to put your big boy pants on, grow the F up, figure it out. That's why you're in this position, so you can figure things out and just execute. Pretty harsh reality.
Yeah.
But it kind of slapped me in the face where it's like, no, you're right. She hired me for, my abilities. There's that level of trust. I do need to grow up and make a decision, whether it's right or wrong, we'll figure it out later. We can now translate a lot to VC, right? It's very long feedback loop. You are only able to make decision based on information that you have right now, which may change with the wind, whether it's due to regulatory, whoever's in office, or really anything that could happen if you're in the consumer space. But yeah, you just sometimes have to just grow up, make a decision, and trust your gut. And that's kind of how we go about some of the companies that we invest in. It's like, hey, is this the best company out there? We like to think so. We've looked and did our diligence. And end of the day, sometimes you just gotta sling the check and trust your founders and trust yourself. And you figure it out if you're
Yeah.
right or wrong in 3, maybe 10 years.
Yeah. Well, I think that's a brilliant example, and I think that you could actually transfer that not just into VC, not just into Tret, but I think to all of us really. I think that the world is tough. It's really tough, and obviously I speak with lots of founders. The founders, as we all know, the founder's life is difficult. It's lonely. It's you feel like you're pushing against everything sometimes. Everything's going against you, and I think that ability to well, as your, well, I'll say mentor, but as this person said to you, put your big boy trousers on and get on with it is so important. And yeah, I think that's a great example of something that's going to really affect your life.
Yeah, especially now
Um,
with startups. And I know we have a lot of founders on the call. Now that I've had, a few months being on boards and being able to listen to a lot of the board meetings of our companies, a lot
yeah,
of times it's not the action that kill companies, it's the inaction when founders just
100%.
won't make a decision and they're just taking forever. And that's where things die, right? It's you're taking too
Yeah,
long. And just trust your gut, make a decision based on the information you have. If it's wrong, pivot. That's why I think
yeah,
there's that saying, move fast, break things, and then pivot if you need to.
yeah. Yeah, it's so true. And again, I think you and I could probably talk cliches all afternoon with this because I feel exactly the same. Another one that I use constantly is that is a rocket ship corrects itself to the moon. Um, it's a rocket ship is always trying to veer off course, and it's the pilot's job to keep correcting that path to where it needs to go. And I think that, like you say, the key to that is keeping that forward momentum, making those considered but quick decisions, and being prepared to pivot and be prepared to move forward. So no, that's really really good. What would you say motivated you to become a venture capitalist? And what keeps you passionate about investing in startups? And I think this is a great question, especially in the current market,
Yeah.
in comparison to 2 years ago.
Yeah, I think unlike some other investors, I actually never wanted to be a VC. Like I didn't even know what venture capital was. I did not want to go into finance. Coming out of college, I wanted to throw music festivals. So
Cool.
that's all I'm good at. It was like events. And then I think it was working with startups and seeing what they go through and then learning about VC, seeing both the good and the dark side of VC kind of made me become obsessed with it. And then that was when I decided like, I want to be a venture capitalist. I want to be able to work with founders for the rest of my life just because I get very bored in a suit entertaining execs like corporation, Fortune 500 execs. They're pretty boring. But startup founders love them, love talking to them,
I
and the
agree.
passion there, right? That you get to see every day is very inspiring, knowing that it is very difficult being a founder. Like being a VC is way easier. Had I started a company with my roommate, never going back to being a founder. That life was way too hard. So yeah, I think I fell into VC. Part of me wants to be that change that I want to see in the industry
Yeah.
based on some of the stories that you hear of investors berating founders, not doing the right thing to their LPs, to their portfolio companies, and all that good stuff. But really, when it comes down to what keeps me going nowadays, especially with this market, is there's a little bit of me that hope one day, say we're into the future, I would have been able to invested in companies that created an impact of advancing or making life a little bit easier for people just because I'm pretty lazy. I go through my day, I'm just like, why am I dealing with this problem? I hope no one else will have to deal with this problem, especially if I'm in retirement. I would hope I would never have to deal with that problem again. So it's kind of out of pure laziness is what keeps me going at VC.
Yeah, again, I think you're being very humble there. I think from the conversations we had, Triet, it's really what's really clear, and it's kind of come across in your point there, is that you genuinely care. I think the way that like you said straight away, I don't mind you blowing my inbox up. There's my email address. I think, excuse me, a lot of the founders we speak to, they feel slightly disempowered by the system, like it's almost kind of behind this curtain of secrecy. What you need to do, and I think that it's really important that VCs, private equity, you guys that hold the purse strings, that you are open in this way, and that you do, provide a platform as you're doing today, and that you open that platform out, because what that does is it gives knowledge, and it provides that openness. And yeah, I think that it's really clear that you want to do the best by these guys, and yeah, and maybe you don't want to work as hard as they do as well. I know exactly how you feel about that. I've been there myself, and it is so tough in those early startup points.
Mhm.
How do you approach building relationships with founders, and what qualities do you look for in potential investments? We're thinking about soft skills here, I guess.
Yeah, it's a lot more of like a psych game than what you or led to believe, right? Because you're having these relationship with founders and it's for a very long time. I think
Yeah.
there's the statistic out there is that the majority of VC and founder relationship lasts longer than 80% of marriages. And when that's
Wow.
with the
That's is
relationship,
that re-
yeah, you want to
wow.
work with someone that you get along with that will challenge each other. So usually whenever in my first call, I have with founders, I can always know if someone is truly an expert in their field and what their ego is based on how they react to me asking very elementary questions. Because again, we're generalists, right? We don't have depth. We have range, and it's
Yeah.
very easy for us to pick up new concept. But so that's where I kind of ask questions, really nudging them. It's like, do you have the patience to answer these elementary questions for me? Because at the end of the day, you're trying to get something like you're out of this, and I need to know that if I'm on your board, I'm going to ask really elementary question because to be honest, you're the founders are the expert in their field, right? That's why they're doing it, and we're here to just throw money and coach. Um, so that's something I look for is humbleness, and then at the end of the call, I always ask myself, you know, well, I guess you might relate to this because I'm sure you guys are into football, or I guess here we call it
Soccer.
soccer. But for
Yeah.
me, I really like F1 and American football. I'm starting to get into European soccer just because one of our portfolio company is an Arsenal fan, and that was the deal
Oh.
for us to get in. And on the board it was like, you got to become an Arsenal fan. It's like, fun. But the question I asked is, if this founder calls me on a Sunday where F1 just wrapped up, football is about to start in like 45 minutes, I haven't set my fantasy football lined up. Is this someone that I want to pick up the phone, whatever problem that they're having? I'm just like, hey, done. Let me get into the office. Let me cancel the rest of my plan. Throw everything out of the window for that Sunday just to help this person overcome whatever problem they're facing. If the answer is a no, then hey, wish you the best. This isn't a relationship that, I really want to be in for 10 plus years, like is a marriage. So that's where the soft skills that I kind of look for. But other than that, someone that's is coachable and that's willing to admit, hey, sorry, I got this wrong. Because usually I have like I'm Googling a lot of the stuff that the founders say and I'll like prep information and I'll compare them to industry averages. Sometimes I'm wrong, sometimes I'm right, but the ability to have back and forth and try to understand a deeper level in that conversation, that's essentially what I'm looking for, right? I don't want someone that will just, okay, yeah, you're right. Like, I don't want to be your yes man. Like, you shouldn't have yes men around you, nor you should accept everything. But at the same time, you don't want to be too stubborn. Like, yeah.
Yeah. Wow. I mean, I think the second point there about having kind of those yes men or yes people around you is so important. I think if you're not, I think that's one of the big challenges that I ask of the people I work with is that I want people who are going to question what I say. It's the worst thing in the world as a leader. And lots of these guys, they're leading their companies and they need people around them. And so do you. Yeah, we need to be tested. But I want to pick up on the first point that you made because I absolutely love that. I love this idea that, would you cancel your Sunday plans would you cancel watching your favourite soccer team play on the Sunday for this person? And if the answer is yes, then we'll do it. And I think that's a great way to work, and it shows your kind of focus on people there. One thing that I learned many years ago about this was there's a guy called James Timpson who owns a range of businesses in the UK, and he does some like fireside talks. And he did a talk about people once, and he's hired thousands of people across the UK and the world, and he has huge projects where he hires like people from prisons and former criminals. And somebody said,
Mhm.
how do you do it? And he says, I only ever hire nines and tens, right? So they said, well, how do you work that out? And he said, well, it's actually quite easy. He said, you can, if you was to sit down and think about every nine and ten you've ever worked with across your career, they're all going to have the same characteristics. They were high performing, but they cared about their team. They showed empathy. They were, first in, last out. Like all of those, like same types of characteristics would be within that person, from the work ethic to the skill set to the levels of empathy, the people skills, everything. And there would be common themes across that. Um, and then he started talking about these nines and tens, and obviously that's taken on more legs recently because people talk about they're a nine and they're a ten. But what he was kind of saying was nines and tens are the people that you've worked with throughout your life who are the best people. And if you characterize what their best traits were, they're the types of people you want in your life and you want around you, you want to be working with. He said the biggest risk was sevens and eights, because sevens and eights were usually like the star quarterback with a terrible attitude, right? Or
Mhm.
the hardest working, guy or gal you ever came across who just didn't have any ability. So they're like lacking in one of those, and so ultimately they're destined to always struggle. It just kind of made me think about that when you talked about kind of cancelling your plans for that person. Amazing. Can you share an example of a startup that you've invested in and how you supported their growth beyond just financial backing? I think that leads quite a nice segue, actually. Tell me when you cancelled a Sunday for somebody.
Yeah, luckily I haven't had to cancel a Sunday. Had to answer texts and emails here and there, but I think for us, so we run our diligence process a little bit differently. So for us, knowing that we're generalists, we don't have expertise in a lot of fields. What we do in diligence, and I ask a lot of the founders, is, hey, what does the ideal investor look like for you for this round? They'll give me a list. Okay, well, what are some of your dream customers, your dream VCs? And then from there, we have a concept of their ICP, both from the investor side and the people that they're trying to sell to. So then we will go through our Rolodex and start introducing them to other VCs. And if we have a connection at, a customer that they want, then we'll reach out and say, hey, can you help us run diligence on this company, whether it's P&G, corporations, other VC funds. And in that process in itself, we earn our allocation, right? So a lot of times, by the time we join the company and we wire capital, we already made intros to investors. We've already made intros to customers. I think an example is a company called Support Pay. Um, Essentially what they do is that they used to work with co-parents or people are divorced, and they help you figure out how do you split time with for your kids, how to handle communication, tracking
Yeah.
alimony payment, and do all the split billing. And then now they flip the switch to do the opposite. So if you have sisters, step siblings, and you need to care for one parent or whoever, you're able to split that transaction and keep
Yeah.
everything on the record there. So for them, we asked them, hey, you guys already filled out your round. We are coming in super late, sorry, because we're slow. Who do you guys want to meet? And they said green light. Luckily, our managing partner had, a buddy at green light. So during that call, he was like texting them, and then we were able to make that intro. And yeah, that was like their dream
Wow.
customer at the time. And at that point, we don't really have to worry about like, oh, we might get kicked out of the round. We've done everything that your ideal investor that you painted that you want from your ideal investor. Yes, your round is filled, and then they kind of let us in afterwards.
Amazing. I mean, that's so good. And I think what you're talking about there is value add. And I think that, whether or not, probably because you're coming this from a real humanistic standpoint, that's why you see the value in this. But coming from someone like myself who speaks to founders all of the time, that value add piece is so important to them. You know, money is one thing, but that ability for somebody to listen to them and really understand who their ideal client is, and help to make those introductions is just gold dust. Yeah, I think
Yeah,
that's
I wish more founders would make VCs earn their allocation, earn our carry out of our fund, and earn our board seat, right? That's why you took capital from us. And, you start your own company so you don't have a boss. You take outside capital, you have a boss now. Make us earn our spot, right?
yeah. It's so interesting that you say that. I think your inbox is going to explode. I think your inbox is going to explode. Um, what do you believe sets your firm apart from other VCs, and how does that benefit the startups you work with?
Yeah, to be honest, I think now that we're in this age where VC dollars is so easily accessible, and if you ever do like an investor reverse pitch, you're gonna notice like all VC sounds the same, and I don't think we stand out that much different. I think where things stand out and fun stand out are the people at the fun, right?
Mm-hmm.
So I think our unique character is really just our personality at the fun, and then where how we interact with founders, we will never tell a founder what they need and don't need to do. How we handle a lot of things is asking questions. It's like, what do you think is the best decision for your company? Like, what is your gut telling you out of these two options? Usually, that's how we advise our founders. Just end of the day, they know exactly what needs to be done. They just need validation or just someone to talk things through and bring in like, oh, where are some of my blind spots? But to give you, I guess, the secret sauce, if it will. So we have our capital side, with just me and our managing partner. We also have our innovation side, which is our business consultant. And on that side, they work
Yeah.
with corporations, government agencies, pretty much anyone and everyone to help them better understand tech trends, innovation, how to work with startups. So that's where we're able to make some of the intros that we're able to make, especially here in Kentucky. Like Human's here, bunch of healthcare companies is in the region. So yeah.
Yeah, so I guess, I mean, ultimately it's about being plugged in, right? It's about understanding, kind of, again, to the last point, really, where those challenges are, and then providing that value added piece. And I think that, like you say, um, well, to go back to your previous question, to your previous answer, where you talked about making VCs kind of work for it, I think a lot of that, is has been diluted from the supply and demand, um, kind of ratio. So when the supply is really high of cash, and the demand is low, then it's easy for founders to make VCs work. But when there's a scenario like the current one, where there's a lot of dry powder, a lot of, VCs with money in the bank who are not deploying at the moment for whatever reason, we've heard them all. We understand, the landscape and the situation that the VCs find themselves in. I think that because that then creates this almost starvation point where founders really do. I mean, to me, when they speak to me and to my team, they're really focused on they want the right investors with the right thesis, with the right connections, and all of this stuff. But ultimately, I guess it does come down to dollars, especially in the current market. And I think that that's a challenge. So the fact that you guys offer that up and offer that value add, I think is a huge, is a huge separator for you. Um, okay, in your opinion, what are some of the biggest challenges that startups face when raising capital, and how do you help them navigate those challenges?
Yeah, so the biggest thing that I see, and that this is going to be the most basic answer that every VC say, is really the storytelling, the narrative of your company. And that comes down to a lot of founders will pitch the concept, which is great. Like it's great for us to see where the big vision is, but in the now term, we need to understand. And again, as investors, we're in the business of limiting risks, right? And we also
Yeah.
have a great talent for pattern recognition. Pro and cons there, but usually when it comes to numbers, we can understand numbers and see that pattern out pretty easily. Where a lot of founders don't really get is when they talk about their problem, their solution, their use of funds, and a lot of the other slides. There's no quantitative like data in it. Like I tell founders all the time, it's like, okay, play the so what game, right? Hey, this is the problem in the market. So what? So that the people that are facing this problem, this is how much they're wasting, like dollar amount, time, what resources per year. Okay, that is great. Now I understand. Okay, this is actual the amount of dollars that's being wasted, and then you come with your solution. So what? Again, and then it's like, so we're actually saving people the difference there.
Wow.
Great. So now when you get to, and this is what we're going to charge, me in my brain as an investor is like, I can see why someone would pay this because this is actually something that's worth paying for. And that kind of comes back to the saying, you need to make sure your company is a painkiller and not a vitamin. You need to be able to present and really put your finger in that bullet wound so that people truly understand how painful that problem is. So that by the time you present your solution, hey, this is like magic. And then for the use of funds, a lot of founders will just say, hey, here's some, this year we did $500,000 in sales, but with this amount of funding, next year we can go to $14 million in sales. Like there's no way. That's not gonna happen. That's unrealistic. And for me, and I think most investors would agree, I don't care how you spend the money that we give you. To be honest, like if you want to spend it buying box seats at game 3 of the Mavs and Boston Celtics, go for it. What I care about is the result that you provide, right? If you're gonna spend it on those box seats, you better sold some amazing contracts and your revenue by the next quarter better have triple because those box seats are pretty expensive. So that's what I care. Like ask yourself, oh, I'm going to spend $20 in marketing sales. So what? So that's going to be a social media coordinator. So what? So that's a specialist in SEO, top funnel. And then that's going to get you to increase user engagement, you know, new signed ups, revenue by X amount. That's what I care about. So I think that's where a lot of founders don't really think about is we want to know the result that you're going to provide for the money that we're giving you. Because again, if you're seeking VC dollars, you are signing a contract essentially with the devil. We will push you, we will sit in office and demand these results, and you better deliver. Otherwise, we do have the ability to vote you out. And I think a lot of founders forget that. I think the data is like only 12% of founding CEOs stay in their company
Yeah.
by the time it's it. So yeah.
Yeah, that is so interesting. The so what game is really good. Just let me just open that up a little bit. The so what game. So would you say it's worth then when a founder has a solution for a problem, if they take themselves through the so what game and they take themselves to the end of the so what game. So this is my solution, right? For this demographic of people, right? Who, I don't know, buy whatever, Bitcoin, whatever it is, right? And if they take themselves through the so what point, the final answer to the so what, that is actually the crux, isn't it? Like that final answer to the so what game is the one that really matters. Yeah. We create this
Yeah.
solution because ultimately everybody in that market needs this, this, and this, and we're the only people that'll be able to do it, right? So, and because they've got to the end of that point, is that have I read that right?
Yeah, so I'll give you an example. One of our portfolio company is Pontively. They make beautiful dashboards for community data analytics, right? But you don't need to know analytics or code SQL, any of that. So essentially, for their solutions, we make simplify, beautiful data dashboard for analytics
Yeah.
companies. And like you go through that so what game. So we're able to provide a very simple tool, whether you're a marketing person, a salesperson, or a community manager with no technical background, to be able to create and understand the community and data that your company is consuming without data analytics department, data sciences, which essentially would save you millions of dollars per year because you don't have to
Yeah.
hire those folks. And it's integrated into LinkedIn, Twitter, whatever the social you want to use. That's it. It's like, okay, so I can use this product and pay this prescription per year, and I can essentially don't have to hire massive amount of people that come with health insurance, all that good stuff. That is like, okay, I could see why a NFL team would use their product to better understand their
Yeah.
fans, right? That's community
Mhm.
analytics at a fraction of what they're doing right now.
Wow. You need to do me an introduction to those guys. I could do with that. That sounds
Yeah, I
amazing.
will.
That sounds amazing, definitely. Wonderful. So, okay, so how do you stay informed? This is a good one. How do you stay informed about emerging trends and industries to identify the most promising investment opportunities? This is just a little bit of context on this. I would say, of all the gripes
Mhm.
that founders have about VCs, it is like they don't understand the tech. Like the tech's moving so quick, especially like with AI and all the stuff that's going on in that field. I think I know where you're going to go with this because you've already kind of said, we're not technical. We don't have to be technical in that way. But I think this is a really important question about how you stay informed about the emerging trends and industries to identify the most promising investment opportunities.
Yeah, so typically every morning I spend about 45 minutes just reading articles, and then all the deals that's been done in the past week, quarter, stuff like that. As far as trends, we're a little bit more passive in the industries that we tend to go to invest in instead of being active of spending 3, 6 months researching an industry and then we start investing. I think where I find it most helpful is really Monday and Tuesdays. I reserve just for VC networking. So that's when I talk to
Amazing.
other VCs, trying to understand, like what they are seeing because they are specialists. And then I tend to mix in a couple of hedge funds as well as CVC. That's where, they're getting the problem from corporations that have better data analytics for us as far as like market insights and stuff like that. So that's where I get my news from. But then really it comes down to it for me is end of the day, I'm fortunate to be a generalist because I can just go about my day, see something that's broken in the world as your everyday person, and then fall down that rabbit hole and try to piece together the tech that I know from the companies I've seen. And it's like, okay, how for this to work, why is no one solving this? How would I solve it? And, who are some of the smart people? I think my most recent rabbit hole was, everyone knows that dating is broken. The dating app sucks. So something I was curious about was, and this was just because I was having dinner with a friend, and she's like, "Tret, you should get a dating coach." And I was like, our company offer mental health. Like, I get free therapy. I actually don't use it that much, but if we offer a dating coach in whatever platform, that'd be pretty cool. So then
Yeah.
went on deep dive, and it's like, what would it look like if companies, organizations start offering dating services, pretty much dating support, or romantic relationship report as a HR benefit. And that's pretty much led me to a rabbit hole, found a company, we're tracking them. So that's how I find trends. It's not the best way, but it's my way.
Yeah. But it's true though because I mean, interesting one actually, the dating one. But I think the last three conferences I've been to, one in Austin, one in Miami, one in New York in the last week. Of the pitches that I saw, the most compelling, and bearing in mind there are the obvious dating sites out there, but the most compelling pitches were in that sector, in that kind of dating, kind of advisory, connection sector. So it's interesting. It's obviously something that is really relevant at the moment. Um, yeah, great. Can you share a specific investment decision you've made that didn't go as planned, and what you learned from that experience?
Yeah, this one is going to be a dinger for sure. So, when I was earlier in my career, there was a moment where we were in investment pipeline meeting, and one of the partners brought in a company, and I read through the memo, I read through the diligence doc, and it just didn't sit right with me because I had a lot of red flags. It just didn't make sense from a risk perspective as well as a thesis, and I just thought it was way too early. There was a ton of regulatory dependence that for me, yeah, I would have passed on. But at the time, I thought to myself, who am I, an associate, to challenge a partner's decision, especially when it seems like that he made up his mind at that point. Um, and I was just like, you know, sure, I'm not super against the decision, so I didn't like raise my voice. And then turns out I was right. A lot of the regulatory stuff hit obstacles, and then yeah, didn't go so well. I think it's turning around right now, but I think that moment and pretty much taught me like, we're in this position for a reason, and really just be yourself, voice your opinion, and if you're wrong, you're wrong, but it's better to have said something and be wrong than not said something and be been right. Um,
Yeah,
so that one stings. Where that one stings, and yeah, I still carry that with me. So now, I guess depending on who is above me, you're gonna hear a lot more pushback in IC. So I tend to fight a little bit more in committee.
yeah. Um, I'm sure you're probably not at liberty, but can you give us an idea of what that might have cost, that decision, or that lack of stepping forward?
Um, as of right now, it hasn't translated, not that I know of, to any financial losses, but it has taken a lot of time
Yeah,
um off of our plate. But the good news is that it is turning around. This is where, kind of going back to, make your investors earn their allocation and earn the carry that they have in their fund, is that pretty much for the past, I don't know, half year, 8 months, it's been pretty much we meet with the team every, if not twice a week, just to help them change things around. And now we're starting to see a little bit daylight of some of the regulatory obstacle that they ran into that didn't pass the first time is starting to pass. So it is turning around, but thinking back, probably would have still done the deal back then if I have a revote.
interesting, interesting. I wonder if that founder's listening. Probably not.
I mean,
But anyway.
if they are, then hey, you have my email. We can talk more about it. But yeah,
But do you know something? It's so important. It's so important to talk about it, and I think at the end of the day, we all make decisions. We're all led in certain ways to certain points in time where I'm a huge reflector. So everything that I do, I reflect upon anyway, and I often find a way that I think I could have done better, or more in a situation, and so thankfully, it seems like it's not cost any money. B, it's turning round. So, like you say, it was a tough decision, but ultimately you've been able to turn it round, and kudos for you guys for doing that. What advice would you give to early stage founders who are looking to raise capital for the first time? Big one.
don't don't. Kind of goes back to, I would exhaust every avenue, and I know that it is exhausting. It's not a great thing to say because There's government grants. Yes, the filing for it sucks. There's a long timeline, which my response is you knew you need capital coming. You should have prepared for this a little bit earlier, knowing that it's going to take the government a while to give those grants. Um, Loans, you can always do family and friends and stuff like that if you are fortunate enough. If not, there's crowdfunding that's available and that's helpful for a lot of companies. But if you exhaust all of that and you realize you want to take VC dollars, again, you need to understand that you are essentially making a deal with devils, right? Like you started your company so that you can solve a problem and work for yourself. You don't work for yourself anymore. You have a board. You have the ability to be voted out of your company and be replaced. Um, but when it comes to fundraising, if you do decide to go on all of that, it's very relationship focused. So don't wait until you're 3, 6 months out and then start asking for money. Because again, we are humans. We get into the space. So for the relationship to make an impact and all this stuff, we want to build that relationship early on, right? So
Mm.
usually for us to go through our entire process is about 12 to 16 weeks. And that's, pretty long in some people's eyes. I think it's somewhat short. I think we should go longer, to be honest, as far as like knowing the human being. But even if you're not fundraising, still have meetings with VCs, have a investor newsletter. You can do it a quarter, once a month, whatever it is, just so that way you have that bond, you show and prove that, hey, I can communicate effectively. I am very transparent in how the company's is going, whether it's good and bad news, so that by the time that you do need capital, I would have known you for a while. I would say, hey, I met Paul last year. He does an amazing job at communicating both the good and the bad news about his company. He's shown all these little dots on the line of him progressing his company and scaling the company. I have confidence in him that he will answer
Wow.
the phone or the email when I have questions because believe it or not, we have investors that we have to report to, and that means we have to get answers from you so that we can do those reporting, so that we can give you more money when we raise more funds. Um, so that's like very important for us. Is our founders are communicative. We try not to blow them up because we want you to focus on your business, but if we need to, we can hop on the phone, and that is very relationship based. And there are some times where some founders will shoot me an email, and this was like at my previous places where it's, hey, we haven't filled out a single quarterly report survey that you've asked for the past 2, 3 years, but we are running out of capital and we have 4 weeks runway. It's like, I can't help you at that point because I don't really know who you are. So there's not much I can do, and there's not a lot of levers that you can pull to like release that funding because at the end of the day, we do have financial responsibilities to our investors, right? So I think that's the one thing is really just have a relationship, start talking to founders or to investors. Don't ignore junior VCs. Like, yes, they might not be decision makers, but they're the one that run your diligence. They're the one that prep the partners on market information, models, all that good stuff. And they're the ones that will champion for you in committee meetings, right? So be nice to them, spend your time with them, communicate, and remember, we're human beings, so we have just as many biases, preferences, and negatives about us as everyone. And a lot of times it goes down to we just want to work with people that we get along with and that we like to be around. And yeah.
Yeah. Wow. I mean, you've made two or three things there. I've made some notes, and I'm gonna try and touch on three of those points. But just before hit those 3 points, I think the human element there. I'm so glad that you brought that around. Like I think it's really easy in the current market to look at things and think, you know, it's to do with, I run these polls and people vote on financial traction. That finance is the main thing, and all these other things, and they very rarely vote on actually are you a likable founder? Like, do people want to? Do people actually want to see you succeed? Are you a good person? And I still think that ultimately being a good person, this kind of narrative that's gone around that the good guy always loses, I don't think is the case. I think you can be a good person and you can be great at your job as well. And if you're a good person, you're great at your job, there's a good chance that people are going to be in your corner. So I really like that point. Um, to your first point around exhausting other opportunities, I've often, if you did a montage of the calls that I have with people, because the front part of our business is F&F, which basically gets people ready to raise and gets them into a position because of the relationships we have with VCs. And the number of times I've said, have you thought about a credit card? That they're looking to raise $10,000 to just get something kicked off. And I'm like, anything really, like you say, government grant, a loan. Realistically, you're not going to get outside investment for 10 grand, anyway. Maybe do some friends and family and see if somebody can pitch in and help out. But ultimately, you should be able to leverage that amount. Now, obviously, some founders are in a scenario where they can't, but I agree with you completely. I think certainly in the current market, to be going down that line. I mean, in your words, doing a deal with the devil. A lot of the people that I've, friends of mine that have been involved with sales have said similar things. Ultimately, founders go into this um, to work for themselves, and as soon as they bring you guys to the cap table, suddenly they've got a boss, which and the stat that you provided around something like 12% actually wait, stay there till the end is insane. Um, the other two things I wanted to pick up on, and I'll go through those because we've got one last question, and then we've actually filled the whole time slot. So kudos to us, right? The last two things I wanted to make was, first of all, was the time frame. The number of people that come to me saying, "Hey, Paul, yeah, I need to, they're coming to me, like, we're looking to speak to some VCs. We've not spoke to any yet, but we could do really with some cash within 3 weeks." And I'm like, wow, okay. It's interesting that you said, even 12 to 16 weeks is fast, and that realistically they should be looking to get cash, post 6 months after that engagement, to make sure that they can get it. And that's really, really important, and a good bit of advice out there for any founders. And then the final one, which I absolutely love, and I haven't heard this before, was the newsletter idea, and I'm definitely going to take this now and move this forwards with the founders that I have. So what you're suggesting there is that you basically create a monthly, quarterly report, that you then send out to the investors that you'd love to work with at some point in the future. That you talk about the good, bad, and the ugly that's gone on during that quarter. You show that honesty, but you show the progression during that time. And forget about VCs, forget about money. From a marketing standpoint, that makes so much sense, because actually we always buy things that what is it, that you've got to have 11 or 15 interactions before you buy something. Well, actually, what they're doing is taking you on that journey, aren't they? During that point, I absolutely love that idea.
Yeah, I think another advice for founders raising, if they were fortunate enough to have investors, whether it's family and friends, angels, whoever it may be the first time, it's so important to send your investors updates, because when you go raise the next round, your investors are going to be your biggest champions and
Yeah,
make the intro for you. One of our companies, you know, they are so great at doing reporting that when it came for them to raise, we knew that we were going to follow on, but we get monthly updates. So I know everything they need to know about the company, where they're at, even though I haven't caught up with the founder in a while. So when, they went out to raise, we made some intros, and we made an intro to their biggest check in the round. And their investor were in diligence. They, loved everything. They had some concerns. That lead investor called me one morning and was like, Tret, these are my concerns. This is the team concerns. walk me through this. Like, what do you think of this founder and like all this stuff? The only reason I was able to answer any of that on the spot was because the founder kept us informed. One of the biggest problem was, hey, we're worried about churn because they're focusing on serving startups. We know 90% of startups fail in the first year. How do you get over that hump? It's like, no, you're right. That is a churn, but if you look at it, it's a pretty low churn for most of their portfolio being startups. And I think you saw in the deck, they have the ability, and this is where they're focusing, is that pivoting to later stage companies, and now they're start white labeling and all this stuff. So sounds like to me, churn is control. They're making a pivot to their customer market, and they have all this stuff. It was 45-minute call afterwards. He was like, really, thanks for this. You're actually on the phone with the team. This is all the concerns. And then a week later, he texts me. He's like, hey, we're going to send the wire. It's like, great to be co-investors. So that's where that
That's
communication,
amazing.
super important. And even now, they went to go and do an insider round in this market, pretty much raised $4 million, and it took them 3 months
Wow.
because all the
Wow.
investors on the inside saw monthly updates, see everything that the company's doing, and it's like, yeah, of course we trust you. Like all this makes sense. You're providing the result that we wanted and that you promised in the first round.
Wow.
Now you just need extra capital. Yeah, we're gonna trust you and send an insider round and fill it out.
Wow. I mean, that is just amazing. And what a way to end things here. There is one last question, but I'm not going to ask it because I don't feel like we're going to be able to do it justice. But I'm going to say the question and I'm going to say how we're going to answer it, okay? So the last
Yeah.
question is, how do you envision the future of venture capital evolving and what implications do you think that will have on startups and overall investment landscape? Hold that thought because what I'm going to ask to do is we're going to run out of time here. And I want to spend a little bit of time thanking you and all of that. But what we're going to do is I'm going to ask if I could take a little bit more of your time and have you maybe type something up or maybe do a video that we could maybe send out to the attendees for the answer to the last question. Because I do really feel that I think that this is a huge question in terms of how you see the future of the venture system. But I just wanted to say, Triet, that it's been an absolute treat. Triet and treat. Did you see that? What I did there? It's been an absolute treat to have you